Singapore's core inflation eased slightly in October, dipping for the first time in 8 months. Now, prices of electricity, gas and retail goods rose at a slower pace, but the Trade and Industry Ministry says that prices will remain high given ongoing supply constraints. Leisha Rodney with this report.
Food is still getting more expensive at a quicker pace, but the price increase of other goods and services has slowed. That's helped to edge down core inflation to 5.1% on year in October, down from September's 5.3%. Headline inflation, which includes accommodation and private transport costs, also fell 0.8 percentage points from September.
The lower than expected numbers was a welcome surprise, given that the inflation has been steadily climbing over the past few months and even quarters. I think what we note is that there were some high base effects from some products, such as utilities, that dampen on the year-on-year number. But nonetheless, we are starting to see some softening in terms of the inflationary pressures.
That said, core inflation is projected to stay high for the next few quarters. That's amid a tight labour market and strong wage pressures, as well as a GST hike that will take effect at the start of next year. Economists say tightening monetary policy is still on the cards for the central bank.
We still expect the MAS to tighten again in April 2023. That would be the sixth round of tightening since it started in October last year. So we think that it will be via the recentering of the senior band. And really this is to counter the continued rise in core inflation. Although core inflation seems to have peaked in September, we think it's going to stay high compared to the levels that MAS is comfortable with.
The central bank expects inflation to slow more discernibly in the second half of next year. Overall inflation in 2023 is expected to be between 5.5% and 6.5%.